What is going on, guys? Welcome to my new crypto channel called Land City Crypto. In this channel, I will be talking about basically everything related to crypto investments, finance. I'll be mainly going over the top current altcoins there is, NFTs, how to do your research on NFTs, how to do your research on altcoins, and also the mainstream coins such as Bitcoin, Ethereum, Cardano, all the main coins there is. So if you were to go to CoinMarketCap, every top coin you see here from Bitcoin, Ethereum, Tether, BNB, XRP, Terra, Cardano, Solana, all the coins here. Plus, I'll be also covering all the newer altcoins. If I were to go to recently added, so all the new coins that you see here that are recently added, I'll be covering these projects, who they are, what they do, what their project stands for, what are they trying to solve in the crypto world, and who their team is. What I'll be going over their LinkedIn accounts, just to give you guys like a background, so you can do better research before you get into any of these projects. Um, I would like to start off with some basic investment um, chart reading, basically. I know a lot of people here, you probably bought stocks, and you probably know what charts are. I just wanted to go over some basics of what charts are, and what kind of different charts there are, and how to read them, um, and how to basically read them before you make a buying decision. So the way you do it is, let me go over to my TradingView account, and let me open the online whiteboard. Sorry, my computer is running a little bit slow. Let me see if I can right here. Perfect. That works. Okay. Let me see if I can move this. Okay, that's fine. So, I just wanted to go over some basics, like how to read candlesticks and how to read the market types, if it's a trending market, if it's a bearish or bullish market, indicators, candlestick patterns, and just basically give you like a quick intro to charting, because we'll be using this, and I'll be making some videos based on these in the future. So if I were to go over, let me put this on one layout. Okay. So this will be the Bitcoin chart that you're currently looking at, and this is called a candlestick chart. Candlestick basically means, you'll see basically it's shaped of a candlestick, and then there's the flame at the top, if you want to think of it that way. But basically, it's just the shape of it. It's why it's called a candlestick. So, a few things about candlestick charts is that every green bar you see here, it's a bullish indicator, and every red bar you see here is a bearish indicator. Now, you'll be wondering why there are so many like candlesticks on there. That's because in this charting pattern that I'm using right now, I've put it to daily. Daily means every stick represents the price action, which means all the buying and trading of a stock or a crypto coin in a day. So if I hover over, for example, here, right here, you'll see at the bottom it says 9th March 2022. If I hover over the next one, it says 10th March 2022. And the next one, 11th March, 12th March, 13, 14, 15, 16, 17. So basically this means the price action in a given day. Now, if I want to change this to a different time frame, I could do so. So if I were to go to, let's say, 1 minute chart, now each candlestick represents 1 minute of trading in a day. So as you can see here, Bitcoin right now, it's moving up and down. It's at $40,577.51. Keeps going up and down. You see the the motion here, the up and down. of the candle, because right now crypto is, they trade 24 hours a day. There's no day offs like stocks. Um, so you see like it's right now it's live and you can see the charts going up. So right now it's bullish, it's going up that candle, and then you might see in a few minutes it might go down again. I mean it's bearish. So basically this is a chart based on 1 minute candlestick stems. Now if I were to change it to a different time frame, I could do 3 minutes, which means every candlestick represents 3 minutes. I could do 5 minutes, I could do 15 minutes, which means each candle represents 15 minutes. And I could do 30 minutes. Basically, I could choose any time frame. I can do 1 day, 1 week, 1 month, and I can have a custom range. Um, Usually people do this so that they can see, like day traders, they would try to go for either 5 minutes to 1 hour time frame between that, and then long term passive traders would try to go for a daily chart so they can see like the action, price action over a longer period of time. So now the reason I brought up candlesticks is that I would want to basically teach you guys how to read a candlestick. So if you look at one of these bars over here, so any green bar you see, so let me get a picture of the candlestick. So let me draw a green bar. And let me see if I could color this. Not sure if I could. Okay, so let me write here green. So this is the green bar. You can see the green bar right over here. The starting point of a green bar is at the bottom. Bottom means this place over here. This is called the open. And the top of the green bar is called the close. So what does it mean? So if I look at this chart over here, that means this, so the time frame currently set up, let's go to 5 minute chart. Okay, so the current time frame on this chart is 5 minutes. And if you look at this bar over here, this specific bar, it means as soon as this bar ended, as soon as this 5 minute ended, the trading for the next 5 minute block started at the bottom of this bar. So if you look at it, it started at $40,452.53. That's the start of it. And during that 5 minutes, it did all this price action. So it went down a little bit, it went up, 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 and went up again, and it came down, and it closed. So within that, during that 5 minute time frame, at the end of the 5 minute time frame, it traded and closed at this time, at the top here, which is $40,549.71. So you can see that this is a bullish uh, candlestick because it started from bottom and ended at a higher price. That means it's a bullish candlestick. That's why it's a green color. Usually in finance terms, green color means money, and then red is like losing money, or it could be red could be uh, sort of displayed as something negative happening, and then green could be as something positive happening. So that's basically what the open and close means. Now, you can also see that even though it opens at a certain price and closes at a certain price, you can see a part of the candle keeps going up, and you can see a part of the candle is going down here as well. So what are those? So it looks like that and like that. So it doesn't have to be the same size. This could go like more down if it wants to, or it could go like a little bit up. So this is called the high. and then this is called the low. Okay. So what does it mean? So it means that when this candlestick opened at this price point, let's name this price point P1, and then let's name this price point P2. Actually, let me erase this. Let me do it this way. P1, and this one as P2. Okay. So when it opened at price point 1, during that 5 minute, so this is a 5 minute candlestick. During this 5 minute, this low means that it started here, it probably went somewhere up, but it went down all the way to this price point. However, it didn't stay there. It came right back up within that 5 minutes with all the trading happening, and it went back into the green because if you look at this bar, it ended in green, which means it's a positive. It means it's a bullish candlestick, which means it closed at a higher price point than it started. So this low means that during that 5 minute trading time frame, it went all the way to that low, and it came all the way back up to the green, and it actually went higher, so that's why it's called high. So it went high, but then it didn't stay there again. It came back and closed that price too. So if you were to make these ones at, let's say, L1, H1. So once again, this candlestick, it's a bullish candlestick. Opened at the bottom of this candle. It went down to a low of L1, then went back up to a high of H1. However, it closed at the price of P2. So this is a green candle because it started at a lower point and ended at a higher point. So that's what you see here. So I hope that sort of explains and clarifies a lot of questions you guys have when it comes to bullish candles. Now I'll go over what a bearish candle looks like and how to read a bearish candle. So let me draw a candle here. So I'm going to write red here. Okay, so again, this is a green candle. Let me see if I can color this green. I don't think I could. Yeah, that's fine. Okay, so basically with the red candlestick here, I'm talking about, let's look at this specific candle over here. So that candle over there, let me see if I could highlight it. Okay, no, I can't highlight it. So let me look at this candle over here, for example. So if you look at this candle, you can see that it's the same thing as last one. You see red color, which means bearish, and then you can see like there's small part going up and then small part going down here. So with the bearish candle, it's basically the opposite of a bullish candle. So as I explained earlier, the bullish candle starts from the bottom and it goes to the up, whereas a bearish candle, it starts from the top and it goes to the bottom. So it started at a higher price. In this case, it opened at $40,415.94, and it closed at the bottom here, which is $40,291.46. So in a bearish candle, the top is actually the open, and then the bottom is the close. If you can look at these two, you see it's basically flipped version of the other. So the top is basically the higher price point, which is let's say P1, and then the bottom is the lower price point, and that's why it's in red. Because if you bought somewhere here, you would have lost money because it ended in negative, it ended at a lower price. And same thing with this, you can see there's been going up and then there's been going down. So with a bearish candle, same thing here again. This would be the high again. That doesn't change. And then this will be the low. Oops. Okay. Um, yeah, so that's basically that will be a bullish candle, and this will be a bearish candle. Again, once again, it's bearish because it starts at a higher price and it ends, that 5 minute trading period closes at a lower price than what it started with. So that's why it's a red candle. So if you look at these charts, so that's basically the basics of candlesticks, and I hope I explained it clearly enough for you guys to understand it. And I will now go over how to read these as a whole. Like, as you can see, there's so many candlesticks here, and I'll read you basically. My next point is going to be how to read the market as a whole, whether if it's a bullish market or if it's a bearish market. So to do that, let's look at, I'm going to go over the daily chart. Okay, okay. So you can see how when the price point goes up, it goes up and then goes down. It's called a pullback. So whenever it keeps going up, 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 it goes a little bit down. It's called a pullback, and then goes up, and then it goes down, go up, goes down, up, down, up, down, up, down, and then down, 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 and then go all the way back up. So this is a basically I teach you how to read this trend and what this trend means and how you can use it to get into buying, whether you want to open a position or whether you want to sell your position. So look at how the trending market works. I'm going to use one of these tools here, trend line. So let's say I'm looking at this from the bottom over here, which is on 26th July 2021, and I'm going to draw over the last bottom here. Okay, and then I'm going to do the same thing here. Actually, let me reverse it. Okay. Oops. How do I select? There you go. Okay. So in this case, let me. Oops. So, okay. Let me show you how to read this part over here. So, again, I'm going to use the trend line, and you can see that it goes up like that, and then it goes down like that, and then it goes back up like that, goes down, back up. Okay. So as you can see, it's going up and down, up and down, up and down. This is called a bullish market. So this is I'm on the daily chart, and basically this pattern is called a bullish pattern, where It's creating higher lows. Higher lows as in, you can see at the bottom here on 21st July 2021, this was the lowest point, which was at, let me see, the close was at 32,135. And then it went up, 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 up all the way to $42,605. So from 32,000 to 42,000, $10,000 gain in the span of a week. Actually, that's a lot. That's about 20 to 25% gain. So it went all the way up, and then it went down again. So it's called. So the first line is called bullish market, bullish trend, and then it went down, which is technically a bearish trend, but I wouldn't call it a bearish market. This is still a bullish market, and I'll explain in a bit why I'm saying that. So you can see it's going up here, and then it goes down a little bit, and then it goes back up. So what this part over here does is that it's creating a higher low. So you can see the low here was 32,000, but the low here is 37,509. Then you can see that there is another bullish trend. It goes up to a high of it goes up to a high of 48,000, and then it creates another higher low. So if I were to draw these as like that, that's the first low, that's the second low, that's the third low. Okay, as you can see in this market, it keeps creating higher lows. So this basically tells you it's a bullish trend because it keeps going up, down, up, down, up. But overall, it's climbing. It's going up, and you can see if I move to a different time frame, same thing. It goes up, up, up. It goes back down, and then it goes back up. But before I go over to the next part, let me explain what a bearish trend looks like. With a bearish trend, you can see it goes from up, goes like that, then it goes up like that, and it goes up like that, down like that. Okay, as you can see, it's creating a lower low every time. You can see start from the top, and the low here was here, and it went up again, and then went all the way down, and the new low will be here. So that's basically a bearish trend. Now, how you could use this with trading and making an entry into either a stock or a crypto coin would be, as you can see, that it's a bullish trend here. Now, you know the lower lows is here. So what I would usually do is I would just draw a line here. Oops. I would draw a line here, and as long as the market keeps trending up here, I would hold on to this the stock or the coin, or I would make an entry. But I wouldn't make an entry on these green candles. I would wait for a red candle, and if it's keep popping red and red and red, and let's say you missed out the entry here, the next entry is I would wait for these red candles to show up, and I would wait for, as soon as the red candle ends, and I'll wait for at least two green candles. I'll wait for two green candles, and then I'll make an entry. So I would make an entry around here. The reason that I'm waiting for the two green candles is because I don't want this to go up and then go down and then go past the previous lower low. Because if it goes past the previous lower low, it could mean that it's going into a bearish market. And that's not a point where I would like to buy to hold on to something because it's losing value. Unless I'm basically shorting the stock or the crypto coin, which is a topic for a later time. But basically, I would wait for the two green candles before I can make an entry. And then if I do make an entry, I would wait for it to go up. And again, as it's going down, I will keep an eye on here because I do not want it to go past that line here now. So this is the second lower low. I don't want it to go all the way crashing past that lower low. So I would wait before I make another entry. And that's basically how to time your purchase or your entry based on the market trend. Now, I hope I've explained it clearly enough. If you have any questions, please feel free to make a comment below this YouTube video. Um, if not, I would like to move forward and explain about indicators. So the next topic will be indicators and how we can use them to make a purchasing or entry decision when you're making an entry to a stock or crypto. So in this case, let me go over a stock, for example, Tesla. Okay. So the first indicator you see on here, which is called the MACD indicator. So what this does is it basically tells us the trend of the market using a calculation. So it's basically called moving average convergence divergence. Basically, as you can see, if you look at this, I'm currently looking at Tesla stock. You can see as Tesla keeps going up, you can see there is a green bar over here, or green chart, a green line that goes up. And then as soon as it starts dipping, you can see it crosses this moving average line and then it goes down to the red. So if you were to, for example, buy the stock, what you could do is, so let's say you want to buy the stock. If you want to buy the stock, what you could do is, for example, it's going down, down, down here, and it's crossing the moving average, and it's going up. So this would be a good place to make an entry. But again, as you can see, it went. If you were to buy here, it would be $1,000, and it went all the way up to 1,200, and then you can see how this line curves back down. It means it's again getting into a bearish momentum. And you can see it did drop all the way down to 783, it did to 700. So this is good if you're making day trading. This doesn't really matter if you're doing long-term trading where you're buying and holding the stock or the crypto. This is only for day trading. So if you did make day trade, you would have made good money here. And if you know what shorting is, so shorting basically means you're betting on the stock or company's price of the stock to go down. And you can use the MACD, the moving average convergence divergence, to bet, to short basically. So if you were to, let's say you see this line over here, it's a bullish line and it crosses the moving average and it goes down. So if you were to make a purchase here, let's say it's at $1,000 and you held onto it, it dip, it went down, 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 all the way to here. So if you were to buy that $1,000, you have sold it at about, let's say 900, you would have made like $100 profit shorting the stock. If you held for longer, you would have made even more money. So that's how to read the market based on the MACD, the moving average convergence and divergence. And the next indicator that I have here on my TradingView setup, it's called the RSI. So RSI stands for Relative Strength Index. Let me go that. So basically, it measures a measurement used by traders to assess the price momentum of a stock or other security. The basic idea behind the RSI is to measure how quickly traders are bidding the price of a security up or down. So it basically measures the momentum of a stock. So if you look at this chart over here, this is the RSI chart. If it gets closer to, and you can see there's a number over here, is 80, 50, 30. So basically what they say is that if the RSI chart gets closer to 80, it means it's overbought. Overbought means that there is um, like a lot of buying pressure. So the chart goes up, but now there's going to be a lot of selling pressure because people that bought lower are now trying to sell it. So because they want to make a profit. So you can see as soon as it hits like 80 and it goes past 80, especially towards like 90, that means you need to be concerned if you are a day trader trying to get into a stock, because this can mean that people are looking to sell. So the sell side of a stock is going to be higher. So basically, a stock price to go up, the buying side has to be higher than the selling side. So the buying pressure has to be higher, the demand has to be higher for the stock to go up. And if the stock to go down, that means selling pressure has to be higher. That means the supply has to be higher. So in this case, the RSI reaches past 80 and goes to like 90. That means you should know what's coming up next, which is people are going to start selling. And when people start selling, it creates a seller's market. That means it's going to go down. The stock is going to go down because the sell side is higher than the buy side, which means there's a lot of selling pressure. If the stock was to go up, there needs to be more buying pressure. There needs to be more demand. When there's selling pressure, that means there's more supply in the market. There's more liquidity in the market, but there's less people buying. So, as you can see, it did go high to like 90, and then, as I expected, it went down, down, because people were selling, and it created a graph that was going down pretty in a standard way, and it went all the way down to, so it went from the top of 1235 and went to a bottom of 887. So you can see now the RSI graph, what they say is that if it goes closer to 30 now, so instead of 80 it goes close to 30, it means it's oversold. So oversold means that people were selling too much to a point where now there's so many people already sold out. Now the stock is at a very um, at a good entry level. It's a very attractive price for people to get in. So at that point, people will start buying because it's a good entry point compared to 1245. It's at 882, which is a good entry point. And at that point, people will start buying it, and then that would create demand. And when there's more demand, the stock price goes up. So as you can see, it went from about 30 all the way up to 67, which means this part over here went from like 884 all the way back up to 1206. And then you can see it came very close to 80. It didn't hit 80, it came very close to 80, which means again there is going to be too many people trying to sell because they bought at the lower point. Now they're trying to sell to get a profit. So when there's more selling pressure, then it's going to be a red coming up next, which means the price is going to go down. And as expected, it went from a 1204 all the way down to about 687. So that's basically what RSI tells you. It tells you the strength and the momentum of the market, and you can use it to make a buying or a selling decision. So if you're a short seller, you would probably want to get in when the RSI is at a higher point, like at 80 or above 80, or even getting close to 80. If you are a day trader that's going long, you would want to get it at a point where make an entry when the RSI is at 30 or getting close to 30. And that's how you can use RSI, the Relative Strength Index, to make a buying or selling decision. Now that you know how to use RSI and MACD to make entry into a stock or crypto, I would like to move my attention towards crypto now. So just to give some basics about the chart again, so we went over the candlesticks. As you can see, bullish candlesticks and bearish candlesticks and how to read them. And then we went over the trending markets if you see if the market is in an uptrend or a downtrend. And then we went over the indicators, the MACD, which is moving average convergence divergence, and the RSI, which is relative strength index. And now I'm going to move over to crypto. So a few